first of all, thank you, Deutsche Bank, for hosting us here. I'm super excited to be doing this event with the Bitbond team here at this Deutsche Bank branch. Deutsche Bank, in fact, was founded, and the first branch that ever existed of Deutsche Bank was very nearby here. And Deutsche Bank actually contributed to the industrialization in Germany in the 19th century quite significantly, because Germany is known for its industrial capacity and its industrial strength, but all of the industrial firms that have been founded about 100 to 200 years ago would not be here if they had not sufficient access to financing and actually to the bond market that was evolved by some big European investment banks, of which Deutsche Bank has been one of them. And that directly brings us to our today's topic. We want to talk about security tokens, one of the most recent and most, in my view, exciting developments in the financial services industry. At Bitbond, we've been in the lucky situation to be able to launch the first security token offering in Germany, and today we want to share with you knowledge about our security token offering, but also want to give a bit of a broader view into the sector. What are actually security token offerings? What are the advantages compared to conventional security offerings? And what does the ecosystem look like? What kind of players are already in the market today? So the main reason we talk about security tokens and security token issuances is because investing into securities and issuing them is relatively inefficient. If you look at the capabilities that digital technologies bring and the efficiency improvements that other industries have experienced from digitization, it's something that hasn't really arrived in the security space until now. And that's the main motivation. Why should someone be interested in security tokens at all? So as I said, in the first part, I want to talk about our experience with the STO at Bitbond. Then I want to elaborate a little bit about the actual advantages. So why should you run a tokenized security? And in the third part, we will be looking at the ecosystem. So let's talk about the Bitbond security token offering. First of all, what is Bitbond actually? What does Bitbond do as a company? Bitbond is the first ever global SME lending platform. SME stands for small and medium-sized enterprises, and that means that we're giving out working capital loans to these business owners. We've already funded over 3,300 loans, so Bitbond is up and running since quite a while. We started the company in 2013, and have since then built up a pretty big expertise in different parts that are relevant for SME lending. The core product is working capital financing of up to 50,000 euros to SMEs. It's mostly sole traders or freelancers. A lot of our customers are actually retailers who run an online shop or on eBay or Amazon or other e-commerce marketplaces. A lot of restaurants are also our customers who finance larger purchases through the loans that they can get through our platform. And there are two pretty unique features about Bitbond as a company compared to other lending firms. First of all, Bitbond is an international platform, and that means that we have customers from multiple countries. In fact, we have already funded borrowers from over 80 countries. Our main focus region is Europe and select African countries, but in general, the platform is open to an international base of customers. So that's one thing that's pretty unique about Bitbond. The other important thing is that in order to be an international platform, when we started out, we were looking for an efficient way to process payments across borders. When you send a wire transfer from Germany, for example, to Kenya, it takes a couple of days to arrive, and there are relatively high fees attached to that transaction. And one of the reasons for that is that if you send money from one bank account to the other, there's no direct way, but it goes through a so-called correspondence banking system that uses the SWIFT technology in order to communicate with each other, and that incurs relatively high fees and takes a lot of time. And what we've done at Bitbond is we've replaced this back end for settlement with blockchain-based technologies. When we started out, we used primarily Bitcoin because back then it was the only cryptocurrency that was really usable for such a use case. But until today, we have switched the setup, and most of the transactions that are running through Bitbond today are run through the so-called Stellar blockchain, which is a blockchain protocol that is highly optimized for payments. It has extremely fast settlement times at extremely low costs. The good thing is that our customers don't really need to understand the technology that's running in the back end because they can get their loans paid out to the bank account or to their mobile money account because we have integrated with local payment providers that can pay out to bank accounts, and therefore our customers don't really need to understand the underlying technology. Just like when you order something on Amazon, you want same-day delivery. Normally you would not look into the details and the technology that Amazon uses for their supply chain and for their delivery. The only thing that you care about is that you don't have high costs and you get your order delivered as quickly as possible. But you're normally not interested in, how does Amazon make that happen? Only few people who are really excited about technology would like to understand it. And so the same is true for our customers. They appreciate the fact that we pay out loans globally at really low cost, and that's the only thing that's really relevant to them. And the other thing that makes Bitbond unique as a lending platform is the fact that we use a highly automated machine learning model for credit scoring. Every lending platform needs to understand the risk of the borrowers because obviously you can only lend to people who have the capacity to repay the loan. And in order to do that, we use a highly automated process where we get access to a lot of data from the applicant. Normally they would link their bank account and other online accounts like their eBay account when they are a seller, and then we extract transactional history from these accounts. We calculate certain performance indicators like monthly revenue, revenue growth, operating margins, leverage, liquidity. So pretty standard and classical KPIs that also banks would use for their underwriting process. However, the big difference is that we do that in a highly automated fashion and are therefore much faster and can provide that at much lower cost. And that leads us to a point where we can make a credit decision in as quickly as in 30 minutes when all the data is present that we ask for, and normally 24 hours is our benchmark. So normally every applicant who presents us with the data that we ask for receives a credit decision within 24 hours. From an investor's perspective, one point obviously is very important, and that's the return that they can make. And we operate with a target return of around about 10%. So SME loans are an asset class that on the one hand is higher risk than, for example, corporate loans because the default rates are a bit higher. But at the same time, the interest rates are higher. And in a diversified portfolio on our platform, the target return is approximately 10%, which makes it an attractive asset class to a lot of types of investors, and is also, if you look at it from a sophisticated investor's perspective, pretty uncorrelated to a lot of other types of assets, mainly stocks and bonds. It's highly uncorrelated. One other interesting fact about Bitbond is that it's a regulated financial institution. A lot of fintech companies go away where they rent a license. If it's a regulated service that they provide, they go to a bank and would use them as a fronting bank and would rent the license from that. We've decided to apply for our own license. It definitely comes at a cost. It took us 3 years to acquire our license, but now we enjoy the level of independence that we have from that. And yeah, that's one pretty unique thing about Bitbond, because again, if you look at other fintech companies, a lot of times they work together with a fronting bank. Now, I have mainly spoken about the perspective of Bitbond from the customer, which is a borrower. Now I want to talk more about the investor side. For the investors, we want to solve two main problems. On the one hand, as probably everybody here is aware of, we are in a low interest rate environment since a couple of years now. This is not a new problem. This has been a problem essentially since the financial crisis in 2007, 2008 came, that interest rates came down to an extremely low level, and it's very hard to make a profitable fixed income return. And the other problem that we want to solve is that if you do find an investment opportunity that has a fixed income profile that you like, that maybe delivers 5, 6, or 7%, then first of all, these investments are relatively hard to find, especially for retail investors. And if you do find them, they are often illiquid assets. They may be some kind of corporate loan, they may be some kind of special real estate transactions. And so these are things that are harder to find, and if you find them, they're mostly illiquid, which means that you are tied to the maturity of the investment, which can easily be 5, 10, 15, or even 20 years. And so these are the problems that we wanted to address when we were thinking about designing a new product for our investors. So we said we need something that's much better than the investment opportunities in the fixed income space that are already out there. So first of all, we want a high yield asset, and obviously being a lending platform to SMEs, we have a high yield asset. As I mentioned, the target return on the SME loans on Bitbond is approximately 10%, which is definitely attractive. Even if you still have some costs to structuring the investment, there's enough return to be delivered. The second point that we wanted to deliver to investors by showing them a new type of investment is that it is a security. Securities have a lot of positive aspects for investors. Normally they follow a highly standardized legal framework with a prospectus that has to be presented to investors that summarizes the terms of the offer in a very transparent and standardized way, and that summarizes the risks of the investment in a very standardized way. So we wanted to have a security. And the third aspect that we wanted to deliver to investors is an investment that is radically fungible, which means that you can transfer it really easily to other investors or to anybody who you want to sell that investment to. And since Bitbond as a company has a lot of experience with blockchain technology because we are using it for payment processing, it was almost an obvious step for us to decide to create an investment where the investment is represented by a digital token. And we will speak more about the advantages of digital tokens in a few minutes later. So in these three aspects, a high yield asset, a real security, and a digital token brought us to the design of Germany's first security token offering, the BB1 token, as we call it. And with the BB1 token, we're literally reinventing the way bonds are functioning, because these three aspects that I've just presented, we managed to include into the BB1 token. This is exactly not what it looks like. This is what a conventional bond looks like. A conventional bond would have a certificate that summarizes the terms of the bond, and that has coupon payments attached to it. Coupon payments are just another word for interest payments, and if you were buying this bond, then you invested a principal amount, then at every coupon payment date, you would tear off one of these paper coupons, go to a bank, and the bank would give you the interest payment for that. And that was the proof of ownership that you have purchased a share in that bond. And what we've done with the security token offering at Bitbond, we have dematerialized this process. Because even though the example that is here on the slide looks like it's over 100 years old, in fact, the way bond issuances are done today are still exactly the same way. There's still somewhere a paper document that represents the ownership in that bond. Even though you can hold that in an electronic way in your bank account with your bank, there's still somewhere a paper document. So this process hasn't been dematerialized. It's as if you were sending an email and the email was still somewhere represented by a real physical paper-based letter. This is how securities still work today. And our goal was to dematerialize that and make the whole process fully digital. Now, what are the more concrete terms of the Bitbond token, the BB1 token? Well, first of all, it's a high yield asset. The underlying assets that the proceeds from the BB1 token offering are invested into are the SME loans on the Bitbond platform. And of course, we have a structuring cost with the token offering, but then what arrives at the investor is the following. First of all, we are paying out a fixed coupon of 4% per year, so that's kind of the base interest that the investors into the BB1 token receive. And then on top of that, they get a so-called variable coupon, which is success-based, which represents 60% of the pre-tax profit of the investments that we're making. And that leads to a target return of around about 7% if you combine both the fixed and the variable coupon. So it's not the 10% that we're getting if you invest directly into the SME loans portfolio, but at the same time what happens here is that we are turning this portfolio into a real security that is fungible, where you don't need to hold on to that investment until maturity. The second aspect about the Bitbond token is that it is a real security. What we've done is we have drafted a securities prospectus that we presented to the regulator, which in Germany is BaFin, and we were in the fortunate situation that our prospectus was the first one to receive approval by the regulator for a security token offering. There were around about 130 other companies that have filed prospectuses with the regulator for security token offerings, and they were all rejected, and we were the first ones to find a way where both the legal framework, the technical setup, and the prospectus itself receives approval. And that's something that's pretty revolutionary, because before that nobody was able to issue a dematerialized security in Germany as a German issuer. And then the third aspect, the transferability, we achieved by making the proof of ownership in the Bitbond token a Stellar-based asset. So as I mentioned earlier, Stellar is a protocol, a public permissionless blockchain, which can be used on the one hand for payments, but can also be used for token issuance. And if you invest into the Bitbond token, after the offer period is over, you receive your tokens into your wallet. If you don't have one, we help you in setting up a wallet. And then you're holding these tokens, and from the very moment that you have them, you could either transfer them through something that's called a decentralized exchange that comes with the Stellar protocol, or you could even trade it with your friends. So you could go to your friend and say, well, I purchased 100 BB1 tokens in the primary offering, and now I want to sell you 10 of them. They could even pay you in cash, and you could transfer those tokens from your wallet on your phone to their wallet. And that's something that's really, really revolutionary, that was not possible before securities were dematerialized. If you were holding BMW bonds, for example, in your bank account, and you wanted to transfer them to a friend, it's literally impossible. If you called up your bank and you said, well, I want to get my BMW bonds because I want to sell them to a friend, they would say, well, we're really sorry, but it's not possible. You have to sell them through an exchange, and then your friend can buy them through an exchange. But you can't do an OTC, an over-the-counter transaction with a security that you're holding in the bank account. Also, it would get pretty difficult if you wanted to transfer it into another country, because the compatibility of securities and holding in a bank account is really, really low. So these are a lot of challenges that are presented with, that are all eliminated with a real digital token that everybody can hold in their wallet. And so since the Bitbond security token offering is the first one from Germany, it has received a lot of press coverage. It was actually a relatively big surprise that even one of the first European STOs was run from within Germany, because the German financial regulator BaFin has a name for being relatively restrictive and not so easy to approve new innovative projects. And therefore, we feel even more fortunate that we were able to run this from within Germany. So that was the first part about the Bitbond security token offering, and now in the second part I want to talk a bit more broadly about what are actual further advantages about running securities as a token offering instead of the conventional way. So this slide is a little bit more complex than the ones that we've seen so far, because it displays the value chain of a security issuance. And you're always starting with the issuer entity and an asset that is to be securitized. And there can be all kinds of assets. Obviously, at Bitbond, we're securitizing a portfolio of SME loans, but pretty much anything could be the underlying asset. It could be a piece of real estate, it could be some trade receivables, it could be a bond offering by some industrial company. So all kinds of assets can serve as underlying assets to securities. And there's a big difference here between a conventional securities offering and a security token offering, because you always need some kind of assets that promise to deliver an attractive return. And in the second step, we have the regulatory part, which is the prospectus. Also the prospectus, we've done it according to the EU prospectus regulation. So in terms of the structure of the prospectus and the content, it's pretty much the same between a security token offering and a regular security offering. Maybe with one actual substantial change, which is we had to describe the technological risk that comes from the fact that the proof of ownership happens through a digital token instead of a paper certificate. So these additional risks had to be described. In our perspective, the risks are relatively limited, but still the regulator asked us to describe in detail where's the difference based on that. All other parts in the prospectus are very similar. And then the next 4 parts in the value chain are the main parts where there's additional value generated from the fact that it's a token offering instead of a conventional securities offering. The first part is the checkout and the distribution. If you do a conventional security offering, you have normally a checkout that is organized by a bank or a payment agent, and normally this is local to just one or maybe a few countries. While if you do it as a security token, you can normally accept investors from across the world, or at least those countries where you have registered the prospectus. So the limitations that you normally have are on the legal side, but not on the technological side. Also, you can accept different payment methods. On the one hand, at the BB1 token offering, we're accepting wire transfers as a payment method, but we're also accepting cryptocurrencies. So if someone from the Philippines, for example, wants to invest into the BB1 token, normally they wouldn't be investing through a wire transfer, especially if they invest relatively small amounts. The minimum investment amount in the BB1 token is just €1, so it's really, really small, and the entry barrier is really small. So if someone from a distant country wants to invest, a wire transfer would already eat up, a good chunk of the actual investment amount. But if they send cryptocurrency, then they can save on payment costs, and it's actually worth it to make that investment. So the global checkout is one of the first pieces where really there's a substantial advantage. Then the next one is the storage of the security. Conventional securities are normally stored with banks through so-called central clearinghouses. There's more or less a monopoly in Europe with Clearstream, where more or less every security is stored. And this, on the one hand, makes settlement slower. We'll talk about settlement in a minute. And on the other hand, it incurs a cost. So Clearstream obviously doesn't provide the service for free, so you need to pay them. Whereas if you do a security token, the storage is normally either for free, because you can use open source wallets that you can install on your phone or your desktop computer, or if you want, you can use a custodian, which will take money for it, but this is mostly relevant for institutional investors who need certain compliance setups, and who normally for compliance reasons would need a custodian. So there are custodians if you need some, but you are not required to have them. Then trading of the securities is another aspect. Normally, conventional securities you could only trade if they get listed on so-called regulated markets, which are mostly stock exchanges. In Europe, you would have Deutsche Börse, Paris Stock Exchange, or some of the other exchanges that are out there. With digital tokens, you have multiple options. You can trade over the counter, so you could really send the security from one phone to another. You could go on decentralized exchanges that exist, that are normally permissionless and that function just like a blackboard online, where you can see who wants to buy and sell. Or you could go through exchanges that are mostly crypto exchanges and that start to list security tokens. In general, you will have more options, and normally the accessibility is better. You don't have classical trading hours like with normal exchanges, but crypto exchanges normally operate 24/7. And then the final point is the settlement, and this is a pretty important part that we want to talk about in the next slides. Taking one step back, what are actually the main features about securities? Well, these are financial assets that are transferable and that are represented by a paper-based certificate. And normally they should be easily transferable. That's one of the aspects of securities. And if you trade them through conventional exchanges, then obviously they are really well transferable. The system does work very well to a certain degree, but not for everybody. However, if you look at the infrastructure and what's going on under the hood, if you settle a conventional securities transaction, then you will see that there's a lot of intermediaries involved. It would probably even take too long to go through all the steps that are depicted here on the chart for a conventional transfer of a security, but you normally have at least two parties involved, and that's a bank or a broker, and you have the central clearinghouse, where normally the certificate of the security is stored. And this process in itself today functions in a relatively efficient way. So if you want to transfer a security from one party to another within Germany, then normally it goes relatively quickly, or at least within 2 days, which is normally the settlement time for most types of securities. However, the process isn't normally very compatible, and as I said, as a retail investor, you normally would not be able to go through this process. This is something that's normally just accessible to institutional investors. While if you have a digital token, you can really transfer the security from the investor to the issuer and back without any of these intermediaries, which makes the process a lot more efficient and a lot faster. So, and that's because the security tokens are issued on so-called public and permissionless blockchains. So far I haven't really introduced the concept of a blockchain. I assume that everybody who was present here today has at least some first experience, or maybe some has heard about blockchain before. To really quickly summarize it, blockchains function as distributed public ledgers, as they are called. And essentially they are databases where you can keep track of all the transactions in assets that have been issued on a certain blockchain. And they are distributed because normally there is thousands of copies of that ledger. And this is one of the things that makes them really safe, and that makes them also I would say immutable, as it's called. Because when the transaction history of a blockchain is stored on multiple thousand computers, or nodes as they are called, then it's extremely hard or nearly impossible to change the transaction history. And this is something that presents actually a relatively big advantage, especially if you look at over-the-counter transactions, which are often done between investment banks, for example. In many cases, they really track the balances of who has which security at which point through spreadsheets. And spreadsheets are prone to error because if humans need to enter data into these spreadsheets, then even if you don't assume that someone wants to defraud someone, even purely through human error, there can be an error in the track of the ownership of who owned a certain security at which point in time. The other good thing about transferring assets through a blockchain is that they are third-party independent. Of course, there are parties that are keeping the network alive. Normally they have a financial incentive to do so. But the great thing is that if you talk about real public and permissionless blockchains like Ethereum, like Stellar, like Bitcoin, then there's no third party that is required and that you need to ask for permission if you want to transfer an asset on top of these protocols. And this is pretty great because if I want to transfer a security and from my bank account where I hold it, just to the exchange, for example, I implicitly need to ask the bank for permission to do that with every single transaction. We don't really think about it because it's not a common problem in Europe that a bank would not grant us permission to trade a certain security, but in theory, it is the case, and there are countries around the world where banks actually do block bank accounts and where banks do block access to assets that certain people and certain institutions are holding. And so with a permissionless access, you can trade your securities at any time and you can transfer the ownership in them at any time that you want. And finally, one other point which is also relevant is the fees. So the more complex and the more remote a transaction in the conventional world is, the higher the fees. If you transfer assets that are blockchain based, the fees are normally extremely low. irrespective of whether the recipient is in another country or is in the same room with you. So the low cost advantage is mostly there the more complex the transactions are in the conventional world. So as a summary, there are a couple of advantages when you look at security token issuances compared to conventional ones. So there's the cost aspect, and that's, again, dependent on what you compare it to. In some aspects, or in some cases, the cost advantages may not be so big, and in some cases, they might be pretty substantial. Then the easier to transfer aspect and the fungibility is probably one of the biggest advantages. If you think of the settlement chart that I've shown and the number of intermediaries that are involved in transferring ownership in a security, all of these intermediaries are eliminated, which is making the process easier, and at the same time it is compatible to cross-border. It's again the example of the transfer of a letter versus an email is probably pretty helpful here, because the further away you want to send a letter, the more mail services and the more third parties will be involved in that. If you send an email, it's perfectly irrelevant whether the person that you're sending the email to is in the same room with you, is at the other end of the world. You don't care about what kind of device they are using. You don't care about what kind of software the recipient of your email is using, because you know it will just get there. The system is compatible, and everything else you don't need to care about. And so the same is true for transferring security tokens. And then the final point, which is a big advantage, is what I mentioned when you do over-the-counter transactions of securities. If you keep track of them in spreadsheets, it's really prone to error, while if you do that through a blockchain, where every single transaction is included in that ledger, you have a very clear and spotless audit trail of where and when this security went, which can be of a big advantage because you won't essentially mess up who is actually owning which security at which point in time. Now we're coming to the third and final part, which is looking at the ecosystem that has already developed around security token offerings, and which I regard as a highly growing ecosystem. So first of all, even though the Bitbond security token offering was the first public offering in Germany, there have been some corporates that already got involved in security tokens. However, the big difference here is that only a small number of banks and institutional buyers and sellers were involved in these transactions. So these were transactions that were not accessible to the general public. These are transactions that did not have a prospectus that was accessible to the general public. They were just using blockchain technology for a token issuance, but this token issuance was only accessible to a very limited number of parties. However, the good signal here is that corporates do look into this space and do recognize the efficiencies that we've just presented here around security token issuances. The most recent example is Société Générale, one of the biggest French banks, which issued a covered bond. The covered bond market is probably one of the largest securities markets in Europe, with Germany and France probably having the largest issuers in that market. So it's a multi-trillion-dollar market, and they were testing a covered bond on top of the Ethereum blockchain. Then there was a commercial paper issuance between Siemens and Continental, which was a private transaction. So, one thing that's important is that Société Générale was actually using a public blockchain, the Ethereum blockchain, for this, which is pretty remarkable, because banks and conventional issuers are normally concerned with using public and permissionless ledgers, but in this case they did use that, and I really would like to give them credit for that, because not many banks have actually taken that path already. Then we have the example with Continental and Siemens, which were issuing commercial paper, but as you can see, the transaction sizes here just 0.1 million euros, so it was really just a tiny test, while the covered bond by Société Générale with a volume of 100 million, which for a covered bond issuance is actually still relatively small, is a lot more substantial than what Continental and Siemens did. And the third example, which is already back from 2017, is where one of the largest German banks, LBBW, helped with a private placement to Daimler, which was also done through a security token. However, this was also done on a private blockchain, so a blockchain that is not publicly accessible, where they were using proprietary technology. So you could argue whether this is actually a real blockchain, because if it's not public and permissionless, it doesn't really satisfy the criteria. But still, to give them credit for that, they were testing the technology and looking into it, and I think overall that's a good thing. But really, what probably comes closest to a real security token is what Société Générale have done recently with their covered bond. Why do I show these examples here? It's simply to show that there are big corporates who normally don't do things just for fun, who normally do only things if they see a real efficiency gain, and the reason I believe they have done that is because they have recognized the efficiency improvements that we have just seen in the previous slides, and they are looking whether they could use these technologies at scale for future securities issuances. Now, if you take a look into the future, so far we were looking back what has already happened. If you look into the future, what is actually the market potential of security token issuances? Obviously, this is relatively hard to predict, because in theory, you could take all assets that exist in the world, and in theory, all of them could be tokenized at some point. And this could go way beyond just securities. This could even go into physical assets like cars, buildings. In theory, everything that has value could be tokenized and could become tradable. Personally, I don't believe that's something that's going to happen within the next 2 to 3 years, but long term, it's relatively certain that the efficiency gains that are there from tokenization will be leveraged by a lot of players in the financial markets, but also in other types of assets. And there is an estimate by Finoa, which is actually a German company which provides custody services for security tokens, and they estimate that the market and the outstanding principal of security tokens by 2027 will be around about $24 trillion. Obviously, probably the real number will be somewhere else, but the signal here is that the potential value of assets that can and most likely will be tokenized is just a gigantic number, and therefore we are in the very early days of what may become a huge market over the next few years. And the fact that there is already a lot of service providers that are in the market is a strong signal that the market really started to kick off. So there are essentially examples of service providers and of issuers in the entire value chain of a security token offering. You've got issuers like the one that we have discussed, Bitbond obviously, Société Générale, LBBW as a few examples. By the way, there's also other security token offerings that are already running, so these are not the only examples, but obviously we had to make a selection of which are the examples that we're showing. Then you've got protocols. At Bitbond, we are running the BB1 token on top of the Stellar blockchain, which we believe has a couple of technical features to it that make it one of the best protocols to issue security tokens on top of. At the same time, Ethereum obviously is one of the most popular blockchains still for token issuances. And of course, there are also other blockchains, but if I had to choose, I would always go for one of these two, because the technical features that they offer are the best and the most proven ones. But also this may change in the future. There's over 1,000 different blockchain protocols, and who knows, maybe in 5 years from now we will be looking at other protocols that maybe have emerged as the favorite protocols for security token issuances. The whole protocol space is still also in early days. Bitcoin, which was the first blockchain-based digital cryptocurrency, has been released in 2009, so just 10 years ago, and Ethereum, nobody ever thought of Ethereum back in 2009, and probably in 10 years from now, we will again see other protocols that are use case specific that will have emerged and that will probably gain at some point substantial market share. Then we have the legal side, so there are a couple of law firms that are specialized on providing advice specifically to security token issuances. At Bitbond, we have worked with Linden Partners, which is a Berlin-based law firm, which helped us coming up with the concept to start with, and then drafting the actual prospectus. But of course, also White & Case here as an example. These are not the only law firms. There are multiple law firms that are pretty knowledgeable about this space because there's so many issuers approaching them with new projects. Then you need compliance. Typically, as an issuer, you need to do a know your customer check on the investors. If you are a German issuer, then you normally have to comply with German KYC standards. There are two examples here, Identity TM and ID Now. If you look at it globally, there's plenty of compliance providers, but it's definitely one essential part of the whole issuance process. Then you've got issuance platforms that help provide the technology for the checkout, that help provide the technology for accepting payments and token generation. And in fact, since Bitbond has received so much media coverage through the STO that we're running, we have been approached by multiple companies that were asking whether we would white label our technology for their security token issuance, and therefore we have actually just kicked off a project where we provide our platform that we built for the Bitbond STO as a white label solution. So now we're actually becoming also a player in the issuance platforms market. Others could be Consensus, which is a company that has been founded by the Ethereum founders, so they are supporting STO issuance on top of Ethereum. And you've got, for example, Polymath, which is a bigger platform in the US. Then one aspect that's also pretty important is exchanges. And this is one of the fields where the whole STO market is probably in its earliest time. Because there's one interesting fact here. On the one hand, there's a lot of cryptocurrency exchanges around the world where you can trade Bitcoin, Ethereum, and all the other cryptocurrencies. And they are pretty advanced, and the trading volumes are in the billions of dollars every day. So they understand the crypto technology very well. However, there's one kind of problem with these exchanges. Most of them are not regulated exchanges for securities. So nearly all of the crypto exchanges that are out there that have all the technological capabilities to trade crypto-based tokens don't have the permission that you normally need from the regulator in order to offer securities for trading. And then on the other hand, you've got a lot of conventional securities exchanges that have all the regulatory permissions that they need in order to offer securities for trading. However, they lack the infrastructure that you need in order to list digital tokens on your exchange. So we have two worlds right now, and there's a lot going on in the market where these two worlds are being merged. There are a couple of conventional securities exchanges that are building up the infrastructure and the technology that they need in order to list digital tokens, and there are crypto exchanges that are applying for the necessary licenses in order to list securities on their exchanges. Gibraltar Stock Exchange and SIX, which is a Swiss-based exchange, already today under certain conditions can list security tokens, but they themselves are still very early on in the process. But these are two examples that can be named here. I've spoken to around about 15 exchanges over the last couple of months, and all of them are pretty much in the state that I've just described. Either they are securities exchanges that are still trying to figure out the crypto technology, or they are crypto exchanges that are trying to figure out the regulatory part. But I believe that if we looked at this chart in a year from now, there will probably be 5 to 10 exchanges that already list and trade security tokens. And some of them will be conventional exchanges, some of them will be crypto exchanges. And then what you've got is so-called decentralized exchanges. The Stellar protocol comes with a nice feature of a decentralized exchange, which again functions pretty much like a blackboard online. And you've got several interfaces to that. So when you, for example, when you buy the BB1 token on the primary market, in the primary offering, then you hold it the moment we distribute it to you after the offer period is over, and you can go to the decentralized exchange and check out the buy and sell offers that are in there, and you can also put up a buy or sell order on that exchange. And some of these interfaces exist, and Stellar X, the logo that is here on the chart, is one of these examples of an interface to these decentralized exchanges. Then you've got custody providers. As I said, custody is something that's mostly relevant for institutional investors, but obviously this market will only grow if institutional investors enter the market at some point. And one very important aspect for that is custody, and so it's good that there are already custody providers out there. And then one aspect that we didn't cover yet, and that's probably one of the last bigger aspects that we're talking about here today, is stablecoins. I've praised the efficiency in settlement of security tokens. There's one important aspect that makes the whole thing even better, and that's when you can trade on a blockchain, not for another cryptocurrency, but if you can trade for fiat currencies like the euro, the dollar, and other common fiat currencies. Now, cryptocurrencies have a pretty high price volatility. So if you trade, for example, the BB1 token, which is issued on top of the Stellar blockchain for Stellar Lumens, which is the native cryptocurrency on top of the Stellar blockchain. Stellar Lumens have a pretty high volatility in price, very much comparable to Bitcoin, for example. Normally, especially as an institutional investor, if you go in and out of a security, you normally want to hold cash. So this would be either dollars or euros. And you would not want to trade it for a cryptocurrency. The good thing is on top of the Stellar blockchain, there is a stablecoin issuer, which is Tempo. Tempo is a French company that issues a Euro T, as they call it, a Euro token stablecoin on top of the Stellar blockchain. So what you can do is when you trade the BB1 token on top of the Stellar blockchain, you can trade it for Euro tokens. So let's assume you buy BB1 tokens in the primary offering, you want to sell them after a couple of days, you can do that for Euro tokens, which are stable in value. And then you hold a Euro denominated asset, and then if you want to trade other assets on top of the Stellar blockchain, you can do that from your Euro tokens. And this is a very crucial aspect that is important in order for the whole security token issuance space to come to a meaningful size. You've got other stablecoin issuers. One is the USD coin, for example, which is jointly issued by Coinbase, one of the largest companies in the cryptocurrency space, together with Circle, which is also one of the bigger companies in the whole space. So these are probably the most prominent examples of stablecoins. I personally hope that just like with the development in the exchange space, where there will be more exchanges that can list these tokens, there will also be more stablecoin issuers. Because if you look into the details, there are a couple of things that make a stablecoin issuer better or worse. Tether, the third example that's here on the slide, is a stablecoin issuer that issues their own US dollar token, but publicly there have been doubts whether the tokens that they issued are actually backed by real US dollar balances in their bank account. And if this was not the case, so if these doubts were true, I cannot comment on them, I don't know for a fact, but if these doubts were true, then it would mean that the value of their stablecoin is actually not $1, but actually lower than that. And that would introduce a price risk into their dollar-based token, and therefore, in order for the whole space to grow further, we need stablecoin issuers that are audited, that can prove at any given point in time that the euro or dollar tokens that they issue are one-to-one backed by actual balances in their bank accounts. Right, so these were all the facts that I wanted to present to you. One thing that I want to encourage everybody in the room, and especially if there are some bankers around, I don't know for sure. Normally people are really good at finding excuses why not to take the next step in innovation. This cartoon here on the left is one that I particularly like. It's saying this really is an innovative approach, but I'm afraid we can't consider it. It's never been done before. But obviously this is true for every piece of innovation that gets introduced. Someone is always the first one. At Bitbond, we've been the first one to issue a security token out of Germany, which probably a year back a lot of people would have deemed impossible. We have done it, and so can many other companies. And also, if you are presented with an efficient solution, a lot of times people say, well, we're too busy to look at this new solution because we're so busy running our actual current business. But if you offer them something that's actually a lot more efficient than the current solution that they're using, it might be time well invested. And so what I want to encourage you is to check out the security token space, check out the Bitbond security token offering. It's All the information about the Bitbond STO is available at bitbondsto.com. We're also giving out some flyers here that summarize a few facts around the offering. And yeah, again, I'm very happy to see so many of you here. And we have now time for questions, for networking. The drinks are on us, so feel free to take more drinks. And yeah, thank you all for being here.